never seen myself as just one thing, and I made sure no one else could either. By staying true to myself, making my own path, rising above expectations, and opening the door for others to be their true selves. The first spirit, made with VSOP Cognac, finished in bourbon casks. Martell Blue Swift, soar beyond the expected.
Good afternoon, good evening, and good night, depending on where in the world you are joining me from. I am 𝐿𝐉𝐈𝐍, and this is the Crypto and Cognac podcast show, as always, coming to you live every Thursday, 7 p.m. right here on YouTube. And as always, fueled by my friends at Martell Cognac, my friends at Massy Connoisseur, and I'm having myself some Blue Swift VSOP this evening, and we're going to be talking banking. But as always, before we jump into it, cheers, cognac on the rocks, and disclaimer as always, nothing that we share here should be misconstrued as financial advice, right? It's all about the ICE rule. The ICE rule. This is all about information, conversation, and education, as always. This evening, we're going to be talking about banks. We're going to be talking about the idea of being your own bank in the crypto space. It's something that's very popularly said. It's something that is said as a benefit. It's something that is said as, I wouldn't say a disadvantage, but a challenge as well. As you move into the space, everybody gets excited about this idea of being your own bank. So we're going to talk a little bit about, what does that mean? The idea that crypto is going to one day replace the banking industry. We're going to talk a little bit about that, whether that is actually possible or not, whether that's a realistic expectation for crypto in its strictest sense, and maybe talk a little bit about how we might see that evolving. So where do we start? What are banks? Or not so much what are banks, but what do banks do? What are the different types of banks even, right? And I think we could break banks down into basically 4 categories, right? We have retail banks, which basically those are the ones that offer general services to the public. We have commercial banks, and these are the ones who deal primarily with corporate and business customers and offer services to a wide range of businesses, from small to large to corporate entities. And they offer stuff like credit services, cash management. Some of them even offer like real estate, commercial real estate services, employment services, trade finance, different things like that, right? You might find a bank that encompasses both retail and commercial services, right? So a lot of the banks here in the Caribbean carry out both functions. Then we have investment banks, and investment banks basically focus on, as it says, investments. They basically manage clients and offer more complex services and financial transactions. Some would offer stuff like money market funds and equity funds and stuff like that. Some help with underwriting. Some help with mergers and acquisitions. And then we have the central banks. And central banks basically are independent bodies that are used or who have a mandate by the government to manage the money supply of a particular country, right? And all these banks have different mandates, different goals, different priorities. And when we talk about in the crypto space, be your own bank, I guess to some extent we are talking about an intersection of all these different banks and some of the services that they all do. But I don't think, this is my personal view, I don't think that right now cryptocurrencies have yet offer themselves in such a way to replace the services of these various categories of banks, right? Where it is kind of dominating right now is more so in the retail space. And even in the retail space, more so when we talk about be your own bank, we're more talking from the perspective of managing deposits, right? A lot of discussion has taken place in the banking industry and in the banking sector recently, with the banks in the US not being able to deliver on their obligations to their depositors on their own merit, and needing the FDIC to step in, as the case may be, or the government to step in, as the case may be. And I think that is the area I think that right now presents the most concerns for the retail market, and the area where I think crypto is most poised to provide some support, because we always talk about not your keys, not your coins. And it's the same thing in the fiat world. If you don't have custody of your money, is it really yours, right? Because if a bank were to go down and for some whatever reason, the FDIC or the Deposit Insurance Commission across the region or internationally aren't able to step in, are you going to be able to get back the money that you have deposited, right? And that all comes down to the fact that the traditional banks operate on something called fractional reserve banking system. And we've discussed that in previous episodes, so we're not going to get too much into that. But I think the custodial element of the crypto space is where we can see the most value being brought to the retail market. We're going to talk a little bit about some other services that are provided by the retail banking, for example, loans, which is an area that, yes, the crypto market is treating with. There are quite a few platforms that offer crypto lending, but from the perspective of just self custody and having full custody of your own funds, I think this is where crypto really benefits. And for somebody in this space, it seems like a very, very easy process. Basically, you just you set up a wallet, and you're able to transfer funds by crypto using whatever on-ramping platform, whether it's a credit card, whether it's a peer-to-peer transaction, whether it's a bank transfer to onboard your funds. But a lot of people actually aren't so familiar with the process of onboarding to the space. So I wanted to just do a quick run through, do a quick wallet setup using one of the more popular wallets in the space on the Ethereum network. And it can be used for multiple other networks as well, and that being MetaMask. So I want to just do a quick run through of how relatively simple it is to set up a MetaMask wallet. Let me find. So long I go on this page. Right. There we go. Ka-chow. So I hope you're seeing this clearly. Maybe I should change the view so you can see it a little bit better. Right. So basically, you go to metamask.io. Be very, very careful when searching these particular sites. You want to make sure that you're logging on to the right site. So maybe go to MetaMask's Twitter, click the link from there. But again, it's metamask.io. That's the website. Very easy. From there, you basically just download, and then they will ask you if you want to install for whichever browser you're using. I'm using Chrome, so you're gonna install the MetaMask for Chrome extension. So I already have it installed. Otherwise, you would click here, which would say to install. And oh, I just realized that it didn't shift for you guys to see. Hold on. Right. So from here, you guys would have seen I already have it installed. So here you would see install. Right. So just add to Chrome, add extension would pop up. It would give you the download information. And it's loading. Now, from here, very simple. It will ask you if you want to create a new wallet or if you want to import an existing wallet. Now, if this is your first time doing this, obviously you have to create a new wallet from there. Right. So here, asks you to, like I said, create a new wallet or import an existing wallet. So for the purposes of what we're doing today, we're gonna create a new wallet. Right? So you're gonna have some terms, conditions as always. Click I agree. And then it's gonna give you the option to create using a password. So we're gonna do, please use a very, very complex password. For the purposes of the show, I'm just gonna use the Crypto and Cognac podcast, episode 20. Oh, yeah, 27. So, and today is the 4th, right? Not a very strong password, but I mean, I'm not going to be keeping this particular wallet. It's just for tests. You save and confirm the wallet address, and then create new wallet. Now here, they're going to ask you if you want to secure your wallet or if you want to be reminded later, right? You will have to, as you go forward, you will have to secure your secret recovery phrase, right? Which is a 12-word phrase that is basically your master key. We always talk about not sharing your private key. This is what people are talking about for the most part. So do not share your private key with anyone else, right? Secure. Now, you get your 12 word phrase, and you have to write it down, right? Write it down. I don't have time to write it down, so I'm just gonna take a quick picture so that I'm gonna have it as we move forward. So you have, remember, you're reading across 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Make sure and write it down, right? Ideally, it's not recommended to save it to your phone or your computer or anything that has access to the internet, because hackers could have access to it. So ideally, you want to put it in a physical place where you could safeguard it, either a book that you could hide away in a cupboard or in a safe, or I also recommend making duplications of it, maybe one in your office, one in your home, one in your car, depending on where you find it to be the safest. Because at the end of the day, if you lose this seed phrase, you and all will be locked out of your wallet. So we always say one of the important things about being your own bank is that you have to be your own security keeper, because there is no help desk to call, to write an email to, for them to reset your password. Without these 12 words, you cannot move forward with your wallet. Okay. So you have your 12 seed phrase, and to move forward from here, you have to verify it. So the first word was bottom, the second word was casino, the third word was choir. Fourth word was fold. Fifth word student. Sixth word title. Seventh word resemble. Eighth word was famous. And from there, you can continue, and your wallet has been created. So MetaMask is going to install it to complete. Right? So this is just some additional security features where you can enable security alerts, and NFT auto detection, like if anything is sent to your wallet. But this is basically what your wallet looks like. Very simple. And if you have to deposit funds to your new wallet, simple. You go right here, you copy your public address, and that is the address that you can share. That is the address you give to people if they have to send funds to you. That is the address that you use if you have to send funds to yourself. That is the only key, which is your public key or your public address, that you share with others. Never, ever, ever, ever share your private key, right? And that, guys, is basically how you set up a crypto wallet, right? MetaMask allows you to add multiple networks to it simply by changing. Like, I mean, I could show you that, and I could drop a link. I will drop a link in the description to my previous episodes where I walk you through how you add various networks to your MetaMask. So if you want to add Polygon, if you want to add Avalanche, if you want to add anything, Arbitron, Optimism, all you do is click here, drop down box, add network. Some are already pre-listed. So here you could add Arbitron, you could add Polygon from here. You could add Polygon. You can add some of the more popular ones. You can add Binance here. Right? And for the ones that you aren't able to auto add, you just simply add a network manually. And I'll put the link in the caption below, where you can see how you go about adding all those other networks. But yeah, simple as that, simple as kiss in hand. You are officially the owner of your very own deposit holding bank, right? And this account allows you to custody your own deposits. It allows you to make payments and do transfers, which are three of the main services that are provided by retail banks. So you can see immediately from the jump, just by setting up a wallet, you've already started the process of being your own bank. But again, this is not a process to be taken lightly. You have to secure your information. There is no guard outside. There is no deposit insurance to cover the loss of funds in your wallet. There is nobody to call if you make a mistake as it relates to making a purchase. If you lose your private keys or your 12 word seed phrase, there's nobody to call to reset it. So that is something that I think people need to take into serious consideration when they make that step into the crypto space to custody their own funds. Now, there are other options. There are centralized exchange wallets for people who want to have that additional safeguard. It does not involve you custodying your own funds, and it holds some of the same risk as holding your funds in a bank, and maybe even a more extreme version of that risk, as you would have seen experienced by people who store their funds on FTX, Mt. Gox, and other exchanges that have since defaulted on their obligation to their customers. Yo, what's up, Stephen? Yeah, I mean, as it relates to wallets, so there are centralized exchange wallets. There are self-custody online wallets, which are called hot wallets, like MetaMask is. There are also self-custody cold wallets, which are like ledgers. We have come, Stephen, help me out there. I mean, I only really use Ledger, but there are a few other hard wallets out there. There's one that connects directly with your Binance Pay, SafePal, which is another good one. But yeah, these are called cold wallets because they are not constantly connected to the internet, which adds a different layer, an additional layer of protection. Once something is constantly connected to the internet, it means it is accessible to hackers, to malware. Yes, Stephen, thanks for that. Trezor is an very reputable hardware wallet brand. So yeah, so centralized exchange wallets. There are custodial wallets like your Alti app wallet. Then there are self-custody wallets like your MetaMask Trust wallet, Exodus wallet. There are different wallets for different networks, like for example, Phantom, which started as a Solana primary wallet. They've since expanded to include Ethereum and Polygon. There is Ethos wallet, which is a new wallet for the SUI network, SUI network, if I'm pronouncing that properly. I hope I didn't butcher it too much. But yeah, those are just a few. Let me see if I can pull up. See if I can pull up to show you guys. And they work pretty much the same. Some wallets have apps that are built in. Some are web extensions like the MetaMask. MetaMask also has an app that you could download from the Apple App Store or the Google Play Store. I personally prefer to use the apps than the web extensions. I just find the interface is a lot more. I find the interface to be a lot more interactive for my purposes. So I want almost 99% of the times I will go for an app, for a wallet that has an app built in, right? So Ethos similarly just do like MetaMask and you add the extension. And you're cooking with gas from there on. Now, when we start talking about some of the other services that banks provide, a lot of people like to look to lending because most people who engage with the banks do so because they want access to lending services, right? It's not just about storing their money. They could, from their perspective, they could do that under their bed. The reason that they put their money in the bank in the first place is because they want to have access to leverage money that they don't have to do things that they want to do. So whether that's, university education, whether that's vacation loan, whether that's a mortgage or not, those are some of the major reasons why people would be looking to do business with a bank. So what are the options in the crypto space for those types of services? And there are quite a few crypto platforms that offer lending services. We have Zengo, we have CoinRabbit, we have SpectroCoin, we don't have Celsius anymore. We have Aave, Compound, we have Nexo, we have BlockFi. Is BlockFi still in business? Steven, BlockFi still in business? Tell me what. I mean, and then decentralized exchanges also do offer it. So Binance offers some crypto lending, KuCoin offers some crypto lending. And I would say the good thing, so let me talk about the good thing first. The good thing about crypto lending is that usually there isn't any credit check or anything like that, because all they're basically looking is whether or not you have the crypto to be held as collateral. Once that is satisfied, the loan is almost guaranteed to be yours. So whether it is you're using, your BTC, your Bitcoin, or you're using a stable coin, or you're using Ethereum, usually most loan providers would offer loans not above 90% of the collateral. A lot of times you would see they would do it even less because of the volatility of the crypto space. Outside of using stable coins or even fiat currency, like you can use US or USD or G or pounds onboarded with your credit card as collateral for borrowing crypto. But outside of that, most times they will offer collateral. They would ask for collateral, and they would offer the loan up to about 60-70% of the collateral. So that's great. If a bad credit history or whatever is the case, because in the traditional space, if you have had bad credit in the past, even if you have the collateral, sometimes you're still not able to access the loan, right? In the crypto space, it's not like that. Once you have the collateral, the loan is almost automatically yours. The challenge is that now you are required to service the loan. Most times, all the information is presented in terms of repayment period, cost of borrowing, the servicing period in terms of how frequently you have to service the loan, that kind of thing. Some of the good things about the crypto loans are that you're not penalized for early repayment, right? So you pay it back early, there's no additional cost to you. In the traditional space, a lot of times there are penalties for early repayment because the bank is no longer able to access the full benefits that they had calculated in terms of interest earned. So there might be penalties there. Now, like I said, the tough thing about the crypto space is the volatility in the space. So let's say you're using a token as collateral and there is a sharp correction in the market, and now your collateral is significantly reduced, it may cause the collateral to be called in. You might lose your collateral altogether and still have to repay the loan. So some of those things need to be taken into consideration as you start engaging in the crypto space as it relates to some of those services. Now, investments, pretty straightforward, still a very volatile space, but in terms of risk to reward, I would say that there is nothing that could touch crypto that I've seen, and I've looked at many different investment vehicles, but again, high risk. So please understand your risk tolerance. I always tell people, when you are looking to invest in any opportunity, whether it's crypto, whether it's real estate, whether it's bonds, whether it's money market accounts, you need to contemplate your time horizon, you need to contemplate your risk profile, you need to contemplate your goals, right? Because you might be risk averse, you might have a 5-year time horizon, but your goal, if you put your money in the bank at 0.0 something percent interest, and your goal is to save enough to buy a house or earn enough interest to be able to buy a house, then putting $100 a month probably is not going to get you there in the 5-year period. So your goal is important, your risk profile is important, understanding whether you're risk averse, whether you're somebody who is interested in taking calculated risk, whether you fall somewhere in the middle. I think that is important, because if you are a risk averse person, I would say straight from the jump, crypto might not be the place for you at all, because this here is the wild west. Real. So yeah, you could make it all and lose it all. And of course, your time horizon. A lot of people, we hear about a lot of people who lose their rent money, lose their life savings, all because they were trying to turn a return in a short period of time. They might have been hoping to double their rent money within the month to be able to pay their rent and still have some money left over. But none of us knows what the market gonna look like 1 month from today. So you might buy now, and by the time it comes around 1 month from now, the market's down 30%. That token that you invested in down 30%. Now you don't even have your rent money, right? Or some people, there's a lot of talk about meme coins recently. A lot of people want to bet it all on a meme coin, lose their life savings. You know, now if you had a 4 year plan, right, for that same rent. Well, not let's not call it rent money, but let's say you have $2,000 to invest over 4 years. The likelihood that, let's say, you invest it in Bitcoin, Ethereum, and not financial advice, the likelihood that over a 4 year period it's going to turn a profit is very, very likely. Now, in a 4 day time frame, in a 4 week time frame, in a 4 month time frame, we don't know what could happen. So again, your time horizon, very, very, very important. Let me just check out what Steve was saying there. Steven, Steven, oh wait, this is the first comment I see. I got scammed a couple times. Please learn the lesson. Trusted and authentic acted people only. Even people, do your own research. You know what I mean? Even I would do not listen to me. I am not a financial advisor. Do not listen to your friend, your brother, your cousin, your financial advisor who might be into insurance, who might be into stocks, who might be into mutual funds. They may not be sufficiently expert enough in the crypto space. So when we say DYOR, we mean do your own research, because even if everything goes to shit, as long as you are confident that, you know what, I looked at it, and from where I sat, I was comfortable making this decision for me, for my family, or whatever is the case, you could sleep well. So do your own research. Now, what were the other ones? Investment bank, central banks. Now, we've talked about CBDCs before. Um, we see it becoming more and more likely that major countries are going to be issuing CBDCs. We know a few countries have already issued CBDCs, which will be able to be custodied like um, cryptocurrencies in wallets. However, CBDCs, like cryptos, are built on smart contracts. And what that smart contract allows the government access to, we don't know yet what that's going to look like, right? They may be able to pull taxes straight from your CBDC, not even having to go to your account. They look at your trades, they determine this amount of tax due, boom, back to us, right? So that's something that I think a lot of people are concerned about, but ultimately, we've not really seen it yet. Um, so we're gonna have to wait and see. CBDCs, I don't see cryptos necessarily taking the place of central banks. I could see Bitcoin becoming a global reserve currency, but I think even central banks are going to eventually custody Bitcoin as a reserve currency on their balance sheet. So I don't see it being a replacement, but maybe something operating in parallel to how central banks operate. Something, digital gold, for lack of a better term. Um, yeah, it's gonna look very, very centralized. So to wrap it all up, I would say outside of banks really just shit in the bed, um, I don't see cryptocurrencies replacing banks. I think banks can use cryptocurrencies to help deliver more efficient services, lower fees, um, generate a lot more cost savings. Hopefully, they pass those cost savings on to their consumer. That is what I would like to see personally. But I think we are gonna exist in a space where banks operate more and more in the crypto space and banks offer crypto services. I don't think we're gonna exist in a space where banks no longer exist altogether and crypto is the name of the game. I think a lot of banks are gonna fall along the way. I think there's going to be a lot of consolidation of banks along the way. Those who are smart and who take the right steps are going to survive and I think have a lot of success along the way. But ultimately, I don't think that cryptocurrencies or the crypto industry is going to replace um, banks altogether. Just like social media hasn't replaced traditional media, and we see traditional media using social media as a tool to get their news out there, as we've seen social media influencer and digital marketing not replacing traditional marketing and traditional agencies altogether, but we see these agencies adapting and using the technology to provide services to their clients and grow. I think it's going to be the same thing with the crypto industry. Hopefully, that's what we see. Hopefully, these guys don't end up like, a BlackBerry or somebody like that, a Toys R Us, who aren't willing to adopt, because we know what happened to dinosaurs who aren't able to adapt. They become extinct. So I feel like that's it. We went in, we came out, we touched base with Steven. Steven said, don't take no crypto loans. Listen, we're not giving no financial advice here, Steven. The only advice we're giving is to do your own research, not financial advice. But yeah, I'm very excited to see how crypto influences and infiltrates the banking sector. I'm very, very excited to see how it takes form here in the Caribbean. Are we going to see our Caribbean banks wait it out and see what the US and European banks do? Or are we going to see some first movers? We know we have one or two digital banks setting up shop in the region. So let's see what those guys do. But for me, I'm crypto till I die, yo. Gang, gang. Guys, thanks for being with me on another Thursday. Have a blessed one. As I always say, I believe 100% that adoption is inevitable. So when you're going to jump in, that's up to you. Amen. Guys, have a blessed week. Have a blessed weekend. See you all next week. Illuminati out. Be blessed.